I'm fairly concerned. I mean, in terms of my portfolio, I have very little in terms of direct investment in Hong Kong. So I have one telco, and that actually has done pretty well as a kind of flight to safety, I guess, in this environment. I think about everything else that's going on in the world. I think about the U.S. relationship with China. I think about Brexit. I think about Fed policy. I mean, that's still way ahead for me in terms of things I worry about in terms of global, the global world and geopolitics and so on. So Hong Kong is something that is kind of getting stronger and stronger as a concern for global investors. But in terms of kind of direct investment for portfolio managers around the region, I think that's quite limited. And so it's more about whether China steps in, and then there's a kind of discount for China as a whole because of what they do in Hong Kong. But as kind of Hong Kong as its own entity, I think there's kind of less concern as a global event.
What happens, worst case scenario, something goes wrong here, and you've got businesses that are going to want to leave Hong Kong, you've got money coming out of the market there, you've got IPOs looking at other places to list. What happens in that kind of scenario?
Well, I mean, we're already seeing a lot of negativity around Hong Kong because retail sales are going to be impacted. We're going to see property transactions being impacted as well. We've already seen there on the MTR 2 million passengers. I mean, a lot of that will have a short-term impact. But I do think that Hong Kong will bounce back, assuming this settles down within the next month or so. But if this continues longer than that, then I think you will see some kind of reaction from China. You're already seeing that in South China, there is some kind of gathering of troops and exercises and that kind of thing going on. And it may be that China does step in. Now, there's going to be a pretty negative reaction if that happens. And that would be a very, very kind of key negative for China. So in terms of direct investment in Hong Kong, as I said before, I mean, for me, it's a very limited impact.
If it's a limited impact, then why is there so much focus on it right now in terms of what this could mean by way of impacting sentiment in this part of the world? I mean, we've seen what's happening with mainland China markets, sentiment as well, some bit of unwinding, pressure coming in. Why do you think that is the case?
Well, it's because of the violence, and it's an unprecedented event in terms of the way it's continued every weekend. It's got a lot of kind of headlines, but if you think about the key issues in China, about trade, about what's happened to the currency, about slowdown in industrial production, those kind of things actually are far more relevant for me as an investor than what goes on in Hong Kong right now. And my direct investment is very low. So, what happens in China is going to be far more important. And if
there's a serious intervention, if things scale up.
No, that's what I'm saying. So the serious intervention is where things change. And I think we're quite a distance from that. But if that happened, then China itself will be impacted, or the sentiment around China will be certainly impacted.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.